Assalamualaikum warahmatullahi wabarakatuh. Today, my friends and I will discuss on capital structure of Sime Darby Berhad. So before we go deep into what kind of business of Sime Darby Berhad and what is their capital structure and also analysis on their financial, I will briefly explain the basis of what is capital and what is the common sources in the capital. So what is a capital? Capital is anything that increases one's ability to generate value. It can be used to increase value across a wide range of categories such as financial, social, physical, intellectual, and so forth. When we talk about business and economics, financial is one of the most common kind of capital, and the most common sources of financial capital are equity and debt. So, in financial capital, the equity is an ownership stake in a company. An equity investor will receive the residual value of the company in the event it is sold or wound down. Unlike that, it doesn't have to be repaid and doesn't have interest expense associated with it. Equity is used to fund the business and purchase asset to generate revenue. While debt is a loan or financial obligation that must be repaid in the future, it has an interest expense attached to it, which is the cost of borrowing money. The cash received from borrowing money is then used to purchase an asset and fund the operation of a business, which in turn generate revenue for a company. A company's debt generally split into two categories, which are financing debt and operating debt. So this is involved the long-term debt and short-term debt. Financing debt refers to debt commitments resulting from a corporation borrowing cash to fund its business expansion. Typically, debt financing is long-term debt since the amount of debt accumulated is too high for a business to be able to repay it fairly in full within a year. So for the operating debt, it is usually is short-term debt. Operating debt is accumulated during the ordinary business activities of a company. The most common example of short-term debt is the account payable by a company, which is the money owed to supplier or service provider used by the company, and which is typically supposed to be paid off in the very near term.
Okay, so now I will explain to you all about Sime Darby background. Okay, Sime Darby Berhad is a Malaysian trading conglomerate. Okay, its core business operate and serve in industrial, motors and logistics sectors, as well as the healthcare and insurance segments. Alright, firstly, we go through a little bit about the history of Sime Darby. When the Sime Darby was established, who started the establishment of Sime Darby? Okay, in October 1910, there is two British businessmen, which is William Sime and Henry Darby, established Sime Darby and Co. Okay, there is a fledgling player in the lucrative rubber industry. Okay, ini adalah dalam sektor peladangan getah. And then the company later diversified to cultivating palm oil and cocoa and met with the enormous success. Alright, and then in 1977, Sime Darby Holding was taken over by Malaysian investors, mainly through Tradewinds Malaysia Sendirian Berhad. Jadi, dalam tempoh 1970 ini, syarikat British yang menguasai dan menentukan harga getah dekat Malaysia. Jadi, benda ni tak digemari oleh pemimpin dan rakyat dekat Malaysia. Jadi selepas 1970, pelabur Malaysia melalui Tradewinds yang Berhad ini, dia membeli dan menguasai saham Sime Darby. Okay, after 2 years, in December 1979, with the merger of two new Malaysia entities, Sime Darby Berhad (SDB) and Consolidated Plantation Berhad (CPB), Sime Darby moved its headquarters to Kuala Lumpur and became a registered and operated Malaysian company. In the year 2007, three multinational companies, which is Guthrie Berhad, Golden Hope and Sime Darby, was merged into Synergy Drive. On 27 November 2007, it was renamed to Sime Darby Berhad. Okay, so after 10 years, in 2017, transformation of Sime Darby Berhad from a conglomerate to three independent entities, which is Sime Darby Plantation Berhad, Sime Darby Property Berhad and Sime Darby Berhad. It is consisting of industrial, motors, logistic, healthcare and other businesses.
Sime Darby Berhad is listed on the main market of Bursa Malaysia Security Berhad in line Kuala Lumpur Stock Exchange, KLSE. So they have a market capitalization of 15.7 billion ringgit for its fourth fiscal quarter of 2020. And then in plantation segments, its plantation division is the world's largest producer of palm oil. Okay, accounting for about 2.47 million tons or 5% global crude palm oil annually, with 152 branches throughout Asia Pacific. The division owns about 8,600 square kilometer of plantation land in Malaysia, Indonesia and Liberia. So ukuran tanah perkebunan Sime Darby ni dia 12 kali lebih besar daripada Singapura. Sime Darby also distribute heavy industry equipment and luxury market in automotive. The most recent automotive related is in 2019. Sime Darby Berhad acquired 3 car dealership representing BMW, Mini, Volkswagen, Jaguar and Land Rover in Parramatta, Sydney. The motor segment involved in the assembly and distribution vehicles and the provision of after-sales services. And then in property development, it is one of the largest property developers in the country by revenue and gross development value, GDV of current projects. And then as of September 2014, the company has a land bank of 19,000 acres. It is not including the plantation land. Okay, so the other segments refers to the logistic, healthcare and insurance broking and other general investments. So this is the board of directors Sime Darby Berhad. This is the Group Chief Executive Officer of Sime Darby Berhad, the CEO. Datuk Jeffrey Salim Davidson, 56 years old, he is a Malaysian. He was appointed to the board on 1st December 2017.
let's continue to the main part of our presentation today, which is Sime Darby's capital structure. Our friend Sharmiela has this now covered on the background of the company, and as we all know, Sime Darby is a giant entity, a very well-known company in palm plantation and also property in Malaysia. However, in 2017, Sime Darby Berhad conglomerated into 3 different entities, which are Sime Darby Plantation Berhad, Sime Darby Property Berhad, and Sime Darby Berhad. Prior to 2017, these 3 areas of business were under one big company. After 2017, the company separated. Based on the theory of Modigliani and Miller in 1958, which remained as one of the most prevailing theories on capital structure, many finance scholars came up with different theories on the effect of different capital structure working in a perfectly efficient market. From all those theories, we came up with this, that an optimal structure is a very difficult combination to determine. It falls under the responsibility of financial managers to come up with various types of combination that will work optimally for their business operations. They will adjust their capital structure accordingly depending on the company's strategic and philosophical objectives. Now, let's talk about the case of Sime Darby Berhad. The business activities which remain in the core business of Sime Darby Berhad revolve around industrial, motor, healthcare and logistics areas. From this information alone, we shall expect to see the capital structure of Sime Darby Berhad will be comprised of majorly by equity and also probably some proportion of short-term debt and less of long-term debt. This was due to the nature of main business of the company, which, as mentioned earlier, the company involves in supplying industrial equipment such as industrial caterpillars, excavators and other heavy equipment. Whereby for motor business, which they carried BMW, Porsche, Jaguar and Land Rover in Malaysia, and these activities require a high liquidity as it progresses really fast, rather than the activities of plantation and property that require long-term debts, which is less liquid. Based on all of this information, now let's start discussing and do some simple analysis on the capital structure of Sime Darby for the period of 2009, 2014 and 2019. From 100% of capital structure in 2009, Sime Darby's equity was at 80% of the capital structure, which worth more than 22 billion ringgit. Short-term debt and long-term debt were quoted at 13 and 7% respectively, amounting of more than 3.5 billion ringgit and 2 billion ringgit. Whereas in 2014, the capital structure is 72% comprised of equity, again the main proportion of the capital, where short-term debt and long-term debt quoted at 8% and 20% respectively. And here, we saw a sudden hike of long-term debt as compared to 2009. The long-term debt held by Sime Darby was worth more than 8 billion ringgit here, and this was due to one of the biggest property projects held by Sime Darby in 2014, which was the development of Paguh Education Hub. And finally, in 2019, the total equity from the capital structure quoted at 85%, while the short-term debt showed a slight increase, which recorded an increment of 6% from previous 5 years, quoting at 14% from the total capital structure. Therefore, the remaining 1% is represented by the long-term debt. We can see a very obvious shift here. As mentioned earlier, Sime Darby Plantation Berhad and Sime Darby Property Berhad got conglomerated in 2017. Thus, the long-term debt was carried by the Sime Darby Plantation and Sime Darby Property. As such, the long-term debt decreased drastically in 2019. Sime Darby Berhad only maintained 1% of long-term debt from the total proportion, which worth only around 180 million ringgit. And in conclusion, as we know that equity is generally more liquid than debt, that is why the whole operations of Sime Darby in 3 financial years of our study showed that capital structure of Sime Darby was contributed majorly by equity. The lowest equity recorded was in 2014 at 72%, which still holds the biggest proportion as compared to debt. For 2009 and 2019, both these equity are at 80% and 85%, still the major contributor of capital. And with that, I end my part, and let's continue to hear what my friend has to say next. Thank you.
Now, I will explain a part of financial ratio and the analysis of the Sime Darby Berhad company. The first of financial ratio is a debt ratio. What is a debt ratio? The debt ratio is a financial ratio that measures the extent of the company leverage. A debt ratio is defined as a ratio of total debt to the total assets expressed as a decimal or percentage. It can be interpreted as a proportion of the company assets that are financed by debt. A debt ratio greater than 1.0, which is 100%, tells that a company has more debt than the asset. Meanwhile, a debt ratio less than 100% indicates that a company has more assets than debt. The following how we calculate the debt ratio is a total debt divided by the total asset.
Figure 1 above shows the result of the debt ratio for Sime Darby Berhad companies for the year of 2009, 2014 and 2019 was 15.82%, 21.94% and 10.09% respectively. The debt ratio in 2014 increased about 6.12% from 2009. The height of the debt ratio was largely contributed from the increase of total debt of the company, which increased from 5.607 billion in 2009 to 11.174 billion in 2014. But the situation differed in year 2019 as the debt ratio falls to 10.09%, which recorded a reduce of 11.85% from the previous 5 financial year. Even with the high of total debt in 2014, the company however managed to proportionately increase their assets. The increment of 5.567 billion of the total debt was backed by the increase of 15.497 billion worth of assets. As in 2019, both the total debt and the total asset of the company show significant drop, which amount 8.599 billion and 25.42 billion respectively.
The secondly is debt to equity ratio. Compare a company's liabilities to its shareholder equity and can be used to evaluate how much leverage company is using. The following how we calculate debt to equity ratio is total debt divided by the total shareholder equity.
So I will continue presenting about analysis for debt to equity ratio and capitalization ratio.
Okay, so this figure shows the result of the debt to equity ratio for Sime Darby Berhad. The result explains the debt to equity ratio in 2009 is 25.48%, 2014 is 37.92% and 2019 is 17.03%. The debt ratio in 2014 increased about 12.45% from 2009, and assets in the debt to equity ratio was due to boost in total debt, which increased from Rm 5.607 billion in 2009 to Rm 11.174 billion in 2014. However, it was different in 2019 because the debt to equity ratio dropped to 17.03%, which recorded a decrease of 20.90% from the previous 5 financial years. Even with a growth in total debt in 2014, companies also managed to increase their total shareholder equity. An increment in total debt of Rm 5.567 billion supported by an increase in total shareholder equity of Rm 7.46 billion. It shows that 2014 is more leveraged than 2009 and 2019.
Okay, so we move to capitalization ratio. Capitalization ratio are indicators that measure the proportion of debt in a company's capital structure. They are among the more meaningful debt ratio used to assess a company's financial health. Here is a formula to calculate capitalization ratio. Capitalization ratio equal to long-term debt divided by long-term debt plus total shareholder equity.
This figure shows the capitalization ratio of Sime Darby Berhad. After calculation, the result of the capitalization for 2009 is 8.38%, 2014 21.58%, and the last one is 2019 is 1.16%. The capitalization ratio in 2014 rose about 13.20% from year 2009. The height of the capitalization ratio was largely contributed from the increase of long-term debt of the company, which increased from RM 2.012 billion in 2009 to RM 8.109 billion in 2014. In year 2019, the capitalization ratio decreased considerably to 1.16%, which recorded a drastic fall of 20.42% from the previous 5 years. The uprise of total long-term debt in 2014 was due to the property project held by Sime Darby in developing Pago Education Hub. The company, however, managed to proportionately increase their total shareholder equity within the same year. The increment of RM 6.097 billion of total long-term debt was backed by the increase of RM 7.46 billion worth of the total shareholder equity. However, in 2019, the total long-term debt dropped significantly for about RM 7.931 billion after the conglomeration of Sime Darby Berhad into Sime Darby Plantation Berhad, Sime Darby Property Berhad, and Sime Darby Berhad, while the total shareholder equity of the company also showed a substantial fall, which amounted RM 14.347 billion.
So as we heard the analysis from my friends, the main businesses of Sime Darby revolve around industrial, motor, healthcare, and logistics zones. Sime Darby's capital is contributed largely from equity. The equity ratio of the company's worth in 2019, which is 85%, which is the greater equity in the capital structure compared to 2009 and 2014. Sime Darby's service, however, is also funded through debt. The largest debt recorded in these 3 years was in 2014, which accounted for 28% of the overall capital and also had the greater long-term debt ratio compared to 2009 and 2019. In 2019, a substantially small percentage of long-term debt, which is 1%, this show a very dramatic shift because of the decision of Sime Darby to create a conglomerate of 3 different companies back in 2017. The overall capital was largely attributed to equity rather than debt. So, in conclusion, the capital structure continues to form the core or center of any company. It is clear that a corporation truly depends on its financial structure to generate value for the stockholder by making productive use of debt and equity. The emphasis should be on raising returns on equity. The company's performance in 2019 reveals dramatic capital and the capital use less debt as its capital base.